Investors and traders, welcome to the channel. Today is 8th of June 2024. I hope everyone is having a great weekend. In this video segment, we will be taking a look at the key US tech stocks, and we will also be taking a look at the ETFs such as the XLK and the QQQ. As always, this video is for educational purposes only and it is not a financial advice. So this video is going to be a little bit shorter. I will not be able to take a look at a lot of tech stocks as we usually do. So we'll just take a look at some of the major ones. Okay, so starting with the XLK, this is the Spider Select Sector Fund ETF. And here what we are looking at is that finally it has gone and completed this pattern formation around 216. This is what we were looking for. The QQQ had actually already done that. We'll just have a look at that on the QQQ, but the XLK was lagging a little bit. Now the interesting thing is that it has gone and also completed this pattern formation, and if we just look at the daily chart for the XLK, what we can see is that we have the 1.272 expansion come in, and now it's just trying to make a recovery high, but it hasn't gone and taken these highs out. It's just lagging a little bit. Now we'll just move over to the QQQs. Okay, so here we go. This is the Invesco QQQ Trust series for the tech stocks. You can see it's got a slightly different pattern. It reaches 1.272 expansion of this entire 2022 bear market, and XLK had not done that. It had recently touched this 1.272 expansion. So this one is a little bit stronger. I think it's because of the composition, the kind of stocks it might have in its construction. So what it's doing is moving towards this. You see this dotted line ABCD a little bit higher, so the chances are maybe it's able to get above to 472. Not sure if we'll be able to get to 504 quite recently. The reason is because the XLK, it's doing a little bit of a different pattern. Let's go and take a look at the daily chart. On the daily chart, we can see that maybe it wants to aim the 1.618 expansion on 471, but the XLK is a little bit lagging. You can see that after touching the 1.272 expansion, it's doing a recovery high here. So really interesting formation, and these are the levels that we are watching. Now let's take a look at Apple. Really interesting things going on in Apple stock. I will move on to the weekly chart. Actually, here we go. Here we go on the Apple chart. Let me actually bring it around here like this. Okay, here we go. So you'll remember that we were really looking at $163 per share level as a pretty strong support to come in. The stock reached as low as 164 spot 08, so came very, very close to that. And the important thing is that support actually held, and it has held for a number of weeks now. 1, 2, 3, 4, 5, 6, 7. So almost 8 weeks, which is about two months, and the 8th week is going to start next week. And you can see that the past week, look at this candle formation, pretty strong looking candle, and is going and actually challenging these highs around the $200 per share mark. But we think that the stock is actually moving in this ABCD formation higher towards we can target 218 to 237. So that's the zone it's going. I personally think it's going to go to around 235 to anywhere between 230 to 237 is the kind of area it could actually move into, having crossed over this resistance. And it's going to be a pretty strong resistance because there's double top formation here, coming around $200 per share level, and that's the top which actually came in 17th of July 2023, and then a double top formation happening on the 11th of December 2023. So pretty strong resistance is moving into, but with this kind of strength, the chances are on this first, second, third attempt might actually be able to take it out. And the reason is that we believe it's actually in the CD leg higher. So keep on watching this Apple. If it gets above the $200 mark, breaking out of this range, then it's gonna be a breakout. It's gonna be in a breakout mode, and then this ABCD target, you can easily see this move anywhere between $230 to $237 per share level. And if the cycle is extending, then it could be higher as well. But all really depends if it's able to break out of this $200 per share mark, and the chances are it might actually be able to do that, because it's look at the number of white candles that we see, the bullish candles here. So Apple looking really interesting. One of the reasons for strength in the stock is, or could be, because of the event coming up pretty soon for Apple. Their developers event, and they're likely to showcase a lot of development that they have done for the artificial intelligence related stuff. Now, Apple, in my opinion, has always been a company which, if you look at their phones, for example, they might not have the latest or the most aspiring cameras, for example, but they'll wait for one iteration, and the next year they'll have a really good product again, and then the other competitors might have actually moved and improved their hardware. So they have actually always done this kind of cycle, in my opinion. So maybe they have gone and watched the kind of stuff which is happening with the AI, artificial intelligence, the generative artificial intelligence, and now Apple is coming and showcasing their own what they are actually doing behind the scenes with artificial intelligence. A lot of their actually products, the software is using that kind of artificial intelligence built behind the scenes. But are coming up with this new software updates for their products, where they're actually going to put some of that behavior in the hands of the users, so actually users are able to do something with that mode of artificial intelligence. That's going to be a really interesting thing, and they do have a fantastic artificial intelligence personnel and experts working for them, and some of them have actually they are not in the limelight actually, but they have had really inspiring careers, awesome careers at Google, and finding their own companies and stuff. You can actually Google a little bit about the artificial intelligence lead at Apple. So I think the next week is going to be really interesting, and the stock is actually beginning to reflect this in its price over the course of past few weeks. So really interesting stuff happening for Apple. So keep an eye on this one. Okay, now let's take a look at Tesla. Here we go. So the Tesla stock is just stuck in a range, and you can see that this is where the earnings came out, and Elon Musk was talking about having a cheaper car available to compete with the Chinese competitors, and after that, there's just gone, the stock has just gone sideways, and also there's talk about his compensation package and stuff like that. So quite a lot of stuff happening for Tesla. Now it's just back into this trading channel, and it really should be able to break out of it. So we are just waiting for more strength. So I think breaking above $200 per share level is going to give us that indication, because that's a 38.2% retracement, and that's the key level that we are watching on the daily chart. Here we go. You can see the number of days. It's just just gone sideways. So maybe it's just a higher base formation, and it could just move higher from here. That's a possibility. The other possibility is that it might actually come right into this box in this zone. So maybe about around $150 per share. That's another $17 or $15 roughly from where it is at the moment. So I'm just waiting for this one, but yeah, the more it moves in a sideways formation like this, I think it will be a higher base formation that might be taking place. What I do not like is these gaps, and so this gap got filled. There is like an open gap here. That's why we have this box here, that there is a chance the stock actually pulls back right into it and fill this gap. So that chance, that possibility is still there. So this is what we're looking at Tesla's. Excuse me. Now let's take a look at NVDA. There we go. Look at this parabolic stock, And let's take a look at NVDA here, and we will be taking a look at this stock on the log scale. Okay, so I've chosen the log scale here on the weekly chart because this stock has just gone really parabolic, and it looks like that 13,000 1315 is kind of shorter term target, and it could go as high as about 1800. So still appears to have more upside, and that's gonna be positive for some of the broader indices such as Nasdaq, because um, the money seems to be moving in certain kind of stocks, so the leadership is getting thinner and thinner. This is something which we'll cover by taking a look at the advanced decline line in our weekly review for the stock market. But yeah, the chances are we have this double ABCD formation. One is a dotted line, one is this blue line coming around the 1800 level. So this is the kind of the market that we will be paying attention to. But the shorter term, I think 1300 is something achievable. So this is what we are looking at in the weekly chart of NVIDIA. Let's take a look at Zscaler. So the Zscaler stock is interesting. Moving back to the daily chart, actually, here we go. So here, ideally, we would have really wanted to see this ABCD pattern held around 193, but it did not. So the pattern actually failed, and what it has done is come and tested the structural highs here, went a little bit lower, and then the next day, boom, the earnings came out. It had a pretty big jump pre-market, and then it just gave up its gains during the actual trading day, and now it's just creeping back up and testing these highs one more time. Now this is structural support, and the actual low came in between the 61.8% retracement and the structural possible support around here. So interesting formation. Now the price is above the 20 period moving average, so momentum seems to be actually improving, but you can see that the price is still below the 200-day moving average, and which is below the 89-day period moving average. Some of the longer term moving averages, they need to catch up, or the price needs to catch up with them and improve the momentum for the stock. Okay, now this is the weekly chart, and what we can see in this one is it has a nice cup formation around here. This is the bear market of 2022. So as long as this point C is held, which is very close to 61% retracement, the chances are we are in this ABCD formation, which could in fact see a 78.6% retracement being tested around 320, and then all-time highs, and then possibly even $450 per share level might be achievable as long as this point C is held. So this is what we are watching for Zscaler. Let's take a look at Microsoft. This is also a stock which is artificial intelligence related. It's just gone sideways for a number of weeks and months. So this 1.61 unit expansion on $433 per share level has been what is capping it. Yeah, there's a ABCD which can see it move a little bit higher, but for now it's just sideways to upward price action in this stock. And let me see, I have this trend line here. And then now it's just coming back and testing this trend line as well. It's not a nice trend line, but it's a very long-term trend line, which was really supporting the stock for a long time. And then 2022 it kind of broke out of it. But this is what we'll just keep on watching, and whether the price is actually extending this ABCD here. But so far 433 1.618 is actually capping the rally, and it just remains range bound in my opinion. Okay, now there's some other stock that we should be taking a look at. Shopify. Here we go. So this Shopify stock, it retraced 50% of this entire low to high, and it seems to be finding some support here. Momentum is slowly improving, but it's still below 20 period moving average. It's finding some support from 89 period moving average. Couple of nice positive looking trading day weeks for the stock, so that's an improvement. So the chances are it might actually be supported here, because it's not 50%, it's 50% retracement of all this decline to the highs, and just below is also the 78.6% retracement. So and then we have this trend line I'll show you on the daily chart. Here we go. Right at the 78.6% retracement of this smaller one. So we'll just keep an eye on it, but looks like as long as this 55 is held, this is what we were watching, 55, 54, where the stock would go. So it came pretty close to that 55. Actually, the low was 56.31, so it came pretty close to 55. Yeah, maybe the stock actually begins to move higher. We are watching this one. It needs to improve on the daily chart. The momentum needs to improve. The moving averages need to begin to support the price more. Fair amount of damage done to this stock, but it's also completing these ABCD patterns around here. So interesting one to watch. Shopify. It just went into the kind of zone that we were waiting for, and it just fell right into that zone. So that was what was kind of expected based on the patterns. Okay, then let's take a look at Meta. Okay, and we'll just take a look at this on the weekly chart. And here we go. Sideways trading range based price action is just stuck in this big range because of the 1.618 expansion. There's a chance it could actually do ABCD, move a little bit lower to 375, which was just perfectly fine kind of a correction. It has already completed 38.2% retracement. So if it begins to find resistance from here, then chances are it's actually doing an ABCD, and 375 could be something which we could take a look at. Now this pattern formation is a little bit old, but again, this 375 is something which we were also looking at, and this is nearby. We'll have around $400 mark, the 200-day moving average, which should be support as well. This is also purely driven by the pivot which Meta, formerly Facebook, took with regards to artificial intelligence. So they kind of pivoted out of the spending Mark Zuckerberg was going to do with the metaverse concept, pivoted more into artificial intelligence. Investors loved it. Stock fell to 78.6%, and just boom, amazing recovery. Netflix, I think this is gonna be the last one I'll take a look at. Okay, actually take a look at it on the weekly charts. Yep. So maybe it goes and tests the all-time highs of 2021. Yeah, it's just gone sideways for a couple of weeks. So it's done its 1.618 extension and gone a little bit above that. So the chances are, if the overall market remains strong, maybe it wants to go and tag these all-time highs. But it's a pretty incredible recovery, but it's just gone into trading range. Needs to show a little bit further strength, in my opinion, for this stock. So this is what we are looking at in the tech stocks. Thank you very much for watching the video. Good luck, good trading. I'll speak to you guys soon.